Alright, so I'm back with part two of a video that I'm putting together here. And this is on February 7th, 2012, the data that we're looking at right now. And kind of want to show you we looked at over optimization on the 6th, and perhaps you have what I would call a wave one runaway that really gets away from you, and unless you find a way to put it into your trading strategy to take care of something like that. There in the last minute, I put a trade channel on, and you could have said, well, if it breaks above this channel, I want to be long. But what happened if it would have continued to bring you in and then go straight on down? I can show you example after example after example that would look similar to that, except it would break up a couple, 2, 3, 4 ticks in between. I'm talking between 9 and 9:30, and then fall out of bed. So it drive you into the market, kind of get you all excited, and your hair on the back of your neck would stand up and think, wow, I really caught something. And then it'll proceed for the next 20 minutes before the open of the open outcry of the stock market at 9:30. It'll hemorrhage, and then eventually when that open outcry does open the stock market, more times than not, at least for me, in my experience, it'll drive you out of the market on that trade. So, needless to say, that's one of the reasons that I try not to over optimize a trading strategy, and it's hard to let some trades go by. Trust me, I know that. You see it on you think, wow, if I could have caught that, I would have been up this for on that. Obviously, the 6th was a Monday, so you're saying to yourself, hey, I would have been up that on a Monday, but excuse me while I get a drink here. Tuesday, the 7th of February, was just a killer day. I mean, you do not get these kind of trading days very often, but when they do, being able to milk them for every penny that they're worth is I believe, in my humble opinion, is the secret to trading success. And more importantly, your secret to success as a day trader. Got to be able to let those profits ride or run, or however you want to say. And but if you are trading just one contract, then you have to have, I believe, a profit target along the ways. I've tried it with all kinds of different ways of doing this. I've tried to let it run. I've tried to let it come back. I finally come up to a conclusion that at least for now, unless I change my opinion again, which as a trader I'm always have the opinion that I can change my opinion anytime. But at this point in time, I'm running at a one contract, the 2.5 to 1 is the ideal profit ratio to continue to grow my account and continue to build to the second, third, fourth. There's a plan to be able to reach for the stars and the moon and all the other things that are above and beyond that, to become, how big of an account do you got to have to be a big account trader? Well, when you're trading futures, 10,000 really doesn't go very far, especially when you're trading a market that if it would move 1 point against you, you're looking at $1,000, right? So every tick here is $10. So every 10 ticks in this market, for instance, it runs to 97.10 to 97.20. That's a 10 tick move. You're looking at $100. So if it moves up $1, if you're looking at the crude oil market as a whole, if it would go from $97 up to $98, that's $1,000 move in this market. So you can kind of figure out if it would move 5 points against you, or $5 in this case against you, you would lose half of your account in one trade, right? So $5,000 risk on one trade is just, well, obviously I've done shit like that in my past, so that's why I've had to reload my account occasionally, because I do stupid shit. Not I say that politely, and I say that even as a Christian, I do stupid shit as a trader. So, but the other side of that coin is that you have to learn from those mistakes, right? If you're not learning from your mistakes, if you're not learning from the school of hard knocks, which I haven't met too many traders outside that haven't learned from their mistakes, and if they haven't learned from their mistakes, then obviously they're not in business anymore. They're doing something else. They're fishing or whatever else that they enjoy doing. Trust me, I know it can be a very, very big challenge to be a day trader, because I know from firsthand experience how tough this business is, and how tough it is to be a small account trader and try to make a living doing this in the same sense. So I think, you know, a small account trader, you might be ended up working third shift at a job to bring money in for your family if you're married and you know, trying to trade this habit or fund your habit, I guess, in this sense. And you know, someone will say you're a gambler, and I mean, trust me, I've been through all that. Gambler, hey, you're a gambler, you should go to Gamblers Anonymous. You know, you look like an alcoholic, you're Alcoholic Anonymous. You go to AA meetings and act like you're, you know, you have a problem with that when you're actually having a problem with trading. You know, I have Trading Anonymous. Yeah, that's exactly what I got. You know, don't let anyone knock your passion is what I'm getting at. There are going to be negative people. There's negative people everywhere. You know, you hear the real estate people say, oh, there's negative people that says you can't do this, and you're going to run in. Think about sports. If any of you guys are sports and all and whatnot, hey, you're not, you know, how many times does some dad say, at least I've heard it, my son's not good enough probably to move on up to professional level. What a way to deflate a kid as he's growing up, right? Why would you ever say that to your kid? I mean, I don't know if they have potential, but I'm certainly not going to deflate that balloon for them, because you know what? Maybe they do, and I hope so. To God they do, man. That'd be awesome, and for your children as well, you know. So stay positive. I know it's a negative world out there in trading. Trust me, you're going to have more losers than you ever have winners, at least in my humble opinion. And your losers are going to, you know, they're going to hurt sometimes, and they're going to make you have to go back and reload, and they're going to have to make you do things that you wish you didn't have to do. But hey, if you want to be a trader, sometimes you got to do those things you don't want to do, like working at Walmart for $10 an hour stocking shelves, you know, so you can fund your trading account again with that second job and get yourself back onto track again. I've done it. I've delivered pizzas. I've done all kinds of things over the 25 years I've had to be a trader, you know, as an independent trader. So it's tough, you know, because this business it's not for the faint of heart. Honest to God, I wished it was easy. If it was easy, Zig Ziglar said, if life was easy, it's not. Life is hard, and no matter which way you go about it, life is hard. I mean, you can choose the easy way out and sit yourself in front of the TV every night and vegetate in front of it, or you can learn and try to better yourself. I choose the latter. I choose to better myself and let the naysayers and the negative people fall to the wayside and keep moving forward. Because, you know, as a trader overall, I know that I've won a lot more money than I've lost, although I've had some bad trading days, right? You have bad trading days, doesn't necessarily mean a bad trading year. So, okay, I've preached too much on this one. Let me speed this tape up to the area that I wanted to show on this particular trade. Now, as we're looking at this trade right here, you see this high bar right here that's above 400. It's at 408. Let me get my handy dandy marker here. Is that the low? Is this going to be the 0 point? Well, frankly, I can't remember if we break down some more here or if this ends up being the low. I can't remember on this day, but I do know that the day itself ends up being a big day. I believe it comes down for a while. I think it comes down maybe into here somehow, or is this the 6th again? Am I looking at the same stupid day again? Hold on. Let me load in the right day so we can talk about it here for the last 5 minutes or so. I don't know, I just had some things on my mind that were bothering me here lately and needed to get them off my chest, and no better forum here than YouTube, than people that care to want to hear. Here's the bar I was looking for right here, because that was the same bar as yesterday. I was like, wow, that's a 400 bar. Here is a question that I've run into my trading strategy itself is, how far, as it's loading in here still, how far do you let if you say 400 is your level you're hunting for, how far do you think this bar goes down until you say, hey, that's enough, I need to stop that in that case. So here's a bar that's at 394. So does that classify as 400 or not? I mean, 390 rounds to 400, right? So, you know, I've kind of given it, that's where your discretion comes in. So there's the over optimizing your trading strategy, and this can be this too, and do you include a 390 bar when you say, well, I want a bar that's higher than 400? Well, on this particular trading strategy and my alerts go for it, then I'm okay with seeing a 390 bar, because discretionarily speaking, I can make that decision if I want to take advantage of this particular move or not. I know that we're at the in between the 8 and the 9 area, and the high bar here could be a bottom of the market here. So we want to see the market and what it wants to do and how it wants to play out. So let me go ahead and get out here to the 9 o'clock mark right now and pause this tape and get it to 9. Alright, so let me pause right here at 8:46, and what we can see is we can see a defining bar here. Now whether this is going to be the low here or not, we don't know, but we can see our wave forming. You know, the wave before this on the 6th, we saw that this bar, instead of, you know, it kind of did this, and this is the 6th, right, and then it took off. You know, maybe it would have pulled you in here and drove you into the market, where the market would have made you a loser here because it ends up going off. So for my strategy, I want to see it come back underneath the highway. Now whether it's here or here or here, basically what I'm hunting for is a retest, because on the long position, because I'm looking at this over here, right, I'm seeing a bunch of red. Here's my 2000 trade charts here, and I'm seeing a bunch of red bars on my, and if you don't have red coloring bars, what you're seeing obviously is your moving averages and everything's tilting to the downside. The market's going down, right? And you're trying to get long in a down market. So in other words, you're trying to catch the falling knife. So where do you try to catch that falling knife and try to drive this market back up? Now in hindsight, we know that 7th of February takes off and runs all the way back all the way up here and ends up being a past this point and moves, I don't know where, it goes way up here to the 99 mark, I think. So it ends up being a huge day with a lot of money being exchanged. So let me move forward here and get to the point that I want to look at. So here's another point that I just wanted to point out here. You see that we're trying to see this low hold right here. Again, here this low holding, and its market's moving down. But if it does make a new low, well then we just reestablish a 0 point, right? Now we can see if we would draw a horizontal line here at our low, which is close enough. Let me move it up just a little bit. Yeah, we busted through here, we closed underneath it, we've made a new low. Now this 0 point, this is what I'm saying here, you would have got in here and it would have produced a nice little loss here for you on maybe for $1. Let's say if you would have ran this whole way down, you know, you're looking at $400 and something a contract, probably closer to 500 if you'd have take this whole move, and who knows if it's done going down. So this is why I think that when you're trying to trade along, you got to be a lot more patient at it. Okay, now we look at our charts here, and what we can see is we have, hopefully you can see that, and if not, blow up your chart. You see this blue triangle come in. There's been other blue triangles that's formed in the charts all the way through here. But here comes a blue triangle here at the lows, and you're coming down to the lower average daily range as well. So is this the low? Well, I don't know, but I am looking at it. So here we are at the open outcry, and we're starting to see something form here where it's coming up above. Now we want to see it hopefully retest this low and hold, and then bring us into the trade. So let me go ahead and forward this on. So here we are here at 9:05, and we're wondering, okay, is this the low? Should we be getting in here? And let's say you go long here because, yeah, it's things turning over, and then the market drives down here and produces another loss for you. So catching the low is, like it says, catching the falling knife. Catching that falling knife can be very dangerous. So in my last 30 seconds of this YouTube video, let me go through here. What I know is going to happen is this market's going to form this bottom here. We're going to get our 1, 2, 3, or 0, 1, 2, and then we're going to see an entry point come in here. And the market, if you're going to go and back and replay the 7th of February, it's going to drive this whole market out. And you can, anyway, you can figure out your profit. Even if it went up $3 from here, and that would be $3,000 per contract. All right, Dave Knight, talk to y'all later. Bye now.